Well, I don't know about you guys, but I'm going to this Silicon Valley candlelight vigil in San Francisco, 11 p.m. tonight. So better show up, guys. We're gonna give some eulogies to these Silicon Valley companies. Apparently, Jerome Powell is gonna show up with his printer. So I'll see you guys there. We got an update from USDC themselves. So Circle is the company behind USDC, and they want to update us on what's going on. So if you don't want to read this whole thing, they give us a TLDR. Basically, while USDC can be used on-chain, the issuance and redemption is constrained by the working hours of the US banking system. Let's think about this for a second. This is a crypto coin who's supposed to work all the time and says banks are evil. We don't want banks. We can do everything ourselves. Well, apparently they still rely on the US banking system. So you can't have something that powers the world and decentralized, but somehow still controlled by a company and controlled by the US banks. When you have something that's controlled by US banks, that means the United States government can shut the whole thing down. And when you can shut down USDC, you're most likely be able to shut down the whole crypto system as well. So this is what the problem is. Anyway, USDC liquidity operation will resume as normal when the banks open on Monday morning in the United States. As a practical matter, our teams are well prepared to handle significant volume built on the strong liquidity and reserve discussed below. As a regulated payments token, USDC will remain redeemable one-to-one with the US dollar. So that's good news, right? It means, hey, we still promise one-to-one redemption. Now you got to think about it from their company point of view. If they don't say something like that, this will cause an even wider panic. A lot of people will convert the USDC to something else because that's the whole point of the company, right? The whole point of Circle USDC is to make the coin one-to-one redeemable with the US dollar. But as we saw the price of USDC is actually still unpegged. So yeah, it briefly went back to like 99 cents for a bit, but then it went back down again. So back to 96 cents. So this is the problem. So a lot of people think that this is similar to Luna, Terra, where they depegged and it just never went back to a dollar, right? So USDC, after the announcements from their website, people actually went back in. So they had a small arbitrage. So if you actually bought at 89 cents, you're actually making some money out of it. But the problem right now is that a lot of exchanges are limiting the outflow of USDC. So you can't really get the money out or convert to USDC at the moment. So your money is pretty much stuck until this whole thing is resolved. So USDC, they are waiting for the Silicon Valley Bank to open on Monday so they can go in there and take all of their money out. That's the assumption. But we don't know if that's going to happen. So if you want to read the detail, like what happened and all that, I had a video about that where I explained this whole thing. But basically, they give a small summary, what happened, what this bank pretty much went bankrupt because of a bank run, and they are not significantly capitalized. Well, they are capitalized, they just don't have the liquidity to give people back their withdrawals. So therefore, they're forced to sell a lot of their long-term bonds at a huge loss in order to fulfill the obligation to retain people's money. So here's how much USDC has, right? From the company, they say how much they have in the company, right? So here's how the USDC is reserved, how their money. So when you put money into USDC to buy USDC coin, here's what they do with your cash. They're saying USDC is 100% collateralized with a combination of cash and US treasuries. Specifically, USDC is currently collateral 77% with US treasury bills. Now, this is a big one. With 3 months or less maturation period. Now, if you watched my previous video, remember what I said, that the fatal mistake that the Silicon Valley Bank did was that they parked it in long-term treasuries. So reading this part here, it makes me a little bit happy that they actually know what they're doing for USDC. They park it in 3 month or less treasury maturation. That means they can take out the money in less than 3 months. And it's a short-term treasury bill, and 23% with cash held at various institutions, of which SVB is only one. So they have in total of $9.7 billion in cash. These are money they're not holding in anything. They're not investing that money in anything. They're just holding it in cash and at various small banks, of which one of them is SVB. So as U.S. Treasury bills are the most liquid asset in the world and a direct obligation to the U.S. government. These reservations are held custody at BNY Mellon, right, BlackRock, so that's fine. The problem is the cash. The remaining cash, last week we took action to reduce bank risk and deposit of $5.4 billion with BNY Mellon, one of the safest. Okay, so you better hope BNY Mellon doesn't collapse. So they put $5.4 billion of USDC in there. 3.3 billion cash reserve remain with SVB. So there you go. This is the number. This is the magic number. So out of the whole, let's see, what is the market capitalization of USDC? I think it's, wow, it's 40 billion, about $40 billion. Okay. The whole thing, whole supply of USDC is worth about $40 billion. So of that, 3.3 billion is remaining with SVB. So at the moment, we don't know whether you can take the money out. As of Thursday, we initiated transfer of these funds to other banking partners, though these funds have not yet been settled at the business close of Friday. We remain confident that the FDIC management of the SVB company situation will stand by to receive these funds. And then all of these stuff. Okay, USDC has zero exposure to Silvergate, which is another crypto bank that had totally collapsed. We had transferred out and were limited reserve to support them. Okay. So what do you expect? Well, pretty much what they're expecting is that Monday, Silicon Valley Bank will be open under a new ownership. They're banking on, well, it's funny that they say the word banking. They're banking on that another company will take over all the assets of Silicon Valley Bank and then make everyone whole. Now, I want you all to know that this is very different than 2008, right? The problem with 2008 is that they over leverage, right? And then they have a capitalization problem. I can't spell. So they don't have the money basically to return people. The difference is between 2023 now, Silicon Valley Bank, is that they are capitalized, but they're not liquid. That's the problem. So this is the difference. Silicon Valley Bank do have the money for everyone, but they just cannot have them now because they invested in the long-term treasury bond. So if you wait 10 years, they're able to pay everybody back with interest, right? But at the moment, they cannot pay it out because the money is locked up in the US Treasury. So the only way to get the money out is sell those treasury early to convert them to cash at a huge loss. And that's exactly what's happening now. So the bank probably won't collapse. So if another company that has the fund, about let's say $3 billion or $200 billion, if they had that cash available, they can buy Silicon Valley Bank at a cheap, valuation, and then they'll pay people out with their cash reserve with the company. Let's say Apple, right? Let's say Apple comes in and say, hey, I want to buy the Silicon Valley Bank right now. And then because we have a ton of cash, Apple has a ton of cash in hand, and they'll pay everybody out. If you owe money, if you have money in there, they'll just pay everybody, right? With the cash that the Apple has on hand. And then they'll take on the debt that the Silicon Valley Bank has. And then in over 10 years, they'll get all the money back plus more, right? So then they got themselves a cheap bank. So this is what's attractive right now about Silicon Valley Bank, because Silicon Valley Bank is in trouble. You buy it up, and then over time, you will be made whole. The only problem is you have to wait like over 10 years to get your money back. And here's the CEO, the SVB sold $3.6 million worth of shares before the bank collapse. I also heard they gave bonuses to all the employees just the day before the whole company go under. And, that's what CEOs do, right? I wouldn't see this as an insider trading at the moment because SVB is a public company and they do have these scheduled stock purchases and sales by the CEOs, CFOs, all these companies, all these people. So I wouldn't see this as an insider trading. I don't think they're that stupid. So at the moment, we do have rumors that there's a lot of buyers. There's a couple of companies who's interested. One big one is, Abu Dhabi. So Middle East, they have this fund that's worth $790 billion. They're going to try to buy Silicon Valley Bank. So they do, only people like that, they can buy it up. And a lot of hedge funds are in talks too about just buying them up because it is a pretty fairly attractive investment because you are buying a company at cheap who's in trouble and you will definitely almost guaranteed to make whole in about 10 years. So yeah, this means that, this doesn't mean that 50% are best startups. That means the banking of these startups is going to be sold to this foreign investment company. So that's the update right now. Let me know what you guys think. Follow me for more videos.